late night, ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, but me some focus. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, welcome back. So we're going to jump back into the charts today. We're going to take a look at the markets. We're getting a bit of a relief bounce, or kind of a continued bounce, or continued relief on the bounce that started last week. We haven't really had any major advancements in terms of the tariff trade war negotiations. We have seen essentially all the countries that are willing to negotiate with the U.S. have been given the reciprocal tariff rate for now. But we do know that the increased tariffs for China, which I believe are at about 134% from the U.S. onto China right now, those are still in place as far as we know. China retaliated with 125% tariffs, as well as halting exports of rare earth metals to the U.S. So that's a pretty big retaliation there. I'm kind of surprised we're seeing this bounce in the stock markets. Everyone had kind of assumed, because there was some rhetoric from the administration around some potential exemptions for semiconductors, chips, technology, that kind of thing. All the stuff that we were worried about having to manufacture in the U.S. at a drastically higher cost. So there's kind of been a new development. Essentially, these aren't necessarily exempt. They're going to be put into their own category of kind of material or of items that will have their own tariffs. So in specific, these ones are going to be in regards to national security, according to the Trump administration. So we're going to probably see more tariffs coming in, specifically around technology, semiconductors, that kind of stuff coming out of China. So that's going to be a major it's going to have a big impact kind of on all the major AI tech companies that source all their stuff from China. So whether or not something is being manufactured in China and exported, it still doesn't change the fact that a lot of parts for all this technology, these electronics, is all manufactured in China. So parts and the actual item itself, post-manufacturing, are subject to tariffs, and we need to be aware of that. We also need to be aware that they're not really getting anywhere with negotiations. China is unwilling to back down. They've basically said they want the U.S. to completely remove all the tariffs. They've filed complaints with the World Trade Organization. They've now halted rare earth exports. And so a lot of retaliation from China. I don't expect the U.S. or China to really back down. So we still have that uncertainty. That being said, we're getting a little bit of relief in the markets. You know, that could be due to just having such a severe drop. So I do expect that bounce at least into resistance, and then we can try to put in a higher low on the chart, reverse our trend to the upside, and try to get in then. That being said, right now we're kind of just in this limbo. Still that uncertainty in the market. We still don't really know what's going to come about. You know, these new tariffs in specific to the semiconductors and technology side of things. So we're just going to take a look at all our major indices here and see what's going on in the market, and just go from there, just to stay aware, stay active. So we're starting here on the dollar chart, the DXY. So we see the dollar just having this big dump out here, coming back down. So that's what we said. We want to see the dollar kind of dumping so that our risk assets can go on to outperform. That's what we're seeing. So we've seen a major bounce in the NASDAQ and the SPY to the tune of about 10 to 15%. So definitely makes sense to see the dollar dumping out here. This is also something we pointed out back over here. So we came up, we had this major uptrend in the dollar. We came back, we put in our 618 retracement here, and then ultimately we went on a bit of a kind of a pump here, and then coming back, retesting that low right there. So that's kind of similar to what we're doing here, in my opinion. For now, we had our major uptrend, came down, put in right around our 618 Fibonacci retracement, you know, had a little bit of relief out here, but ultimately breaking down, back testing that 618. So ideally, for our risk assets to continue going on to outperform, we want to see this continue breaking down. It has lost this low for now, so we are kind of in that potential downtrending structure on the high time frame. We want to see that continue playing out in the dollar if we want our assets to do well. We see the US 10-year here down 2% today. That being said, it's still 4.4%. So we had this massive dump here. Essentially, this was what we had, the Fed raising rates all the way up here, and then Fed starts cutting rates, you know, and then right here, we were kind of hoping, I think, with that stock market crash that it was going to drive the yields down really far. That being said, that's not what we saw. Whether that's because, you know, there's some speculation it was hedge funds having to cover their trades on treasury yield spreads. It could have been the Japanese central bank having to defend the Japanese yen, having to sell some US treasuries, prop up their own currency, or it could have been, you know, China also has major amounts of treasuries. They paused their buying, at least they kind of signaled to their state-owned banks to pause buying of the treasuries. So we saw treasuries spiking back up. That's not what Trump or the administration wanted to see. That's not a good sign of kind of what's going on. If we saw all the stocks dumping, you know, our stocks kind of dumping, treasuries pumping, you know, the dollar's kind of been weak. We've seen that the Swiss franc has really been outperforming, so alternate reserve currencies performing very well. But right now, we still are in this worrisome territory above 4% in terms of the 10-year yield, so we need to pay attention to that. Volatility, look at that, coming back down, so at least we're getting rid of some of the volatile price action going on right now. Price is stabilizing, people starting to kind of digest all the news. So that's what I said, markets are forward-looking. By the time that we kind of admit that we're in the worst of things, you know, generally the markets have already kind of priced that in and moved on, which is why we did take advantage of the opportunity to buy the SPY when volatility really spiked and we saw price drop to 481 here on that low. Our target entry was 485, so right around the low, just perfect entry there. Near perfect entry, and we're sitting in profits there of about 12% on that move. So just a really good job, a nice quick move to the upside, capitalizing on that. We've had our swing trades in Bitcoin that are going successfully, but right now you can see we're kind of just stuck in the middle between our moving averages up here and our support down here. So we've got this upsloping trend line, we've got our 200-week moving average, we've got our VRVP point of control down here on the weekly chart. We've got this buy order block in through here, and we're kind of right in the middle between this and then our moving averages up here. So what we need to be wary of is coming up, retesting these moving averages, getting knocked back down to a higher low, and then that's what I'm more interested in buying into the position. You know, we did our buying down here at 485, so to me it doesn't make sense to be buying, you know, chasing after we've already moved 10 to 15% off the lows. Instead, we're holding our position that we got down here and we're waiting for that subsequent higher low with confirmation on the indicators that we watch to enter an additional entry there and ride that position to the upside. But you can ultimately see, if we go back here, this is what I'm talking about. When we break, we get that bearish cross of the 50 and 200-day moving average. Look at this. We came down, and then we just poked right back above that 200-day moving average. So that's what I say. Nothing really goes up or down in a straight line. We always get these retests of resistance or support. You can see, ultimately, though, this just resulted in continued downtrending price action. So I'm not interested until we get that confirmed trend change to the upside. We saw that right here. So we had that higher low, higher high, subsequent higher low. We had our bullish cross of our moving averages. We'll take a look at our momentum indicators right then, and we saw we were gaining bullish momentum on the DMI with the blue line getting above our other two lines here. We had our bullish cross on the MACD, and we had our bullish cross on the RSI coming from oversold territory. So for me, that's a great opportunity as a good risk return trade. Enter the market, you know, you enter right here, you put your stop loss below this support, and then you're riding that to the upside. That's how we take advantage of trends. That's how we don't get caught buying into a downtrend like this. That being said, we did buy down here because minus 20 to 25% is a substantial correction in the stock market, and you need to take advantage of it when it comes. If you get a 20% correction in 3 days, you know, that's rarely ever happened in the history of the stock market. So just a no-brainer there for me to take advantage of it. Really happy with those buys and riding them up, and now looking for the next opportunity because I'm a technical analysis based person. You know, I can't buy when we're in limbo up here. We're in no man's land. We could just come back down, retest here. That would just be another lower high in this price action. So nothing really to get excited about yet in terms of the price rate here. You know, we could just pump up a little bit more into this area. You can also see other times where we tested it back here, you know, so multiple times we did have to retest those moving averages before we were able to get back above them, hold them as support, and then that is our continuation trend to the upside. So we'll continue watching for similar kind of price action to play out in that sense. The NASDAQ performing similarly, Dow Jones as well, IWM. Take a look at TLT here, getting a little bit of a bounce, but ultimately still just from this key level of support. So big bearish candle right there. We're now stuck under the VRVP point of control. So in terms of our TLT position, I'm happy that we cut it up here. We preserved our capital, we protected those gains, and prevented ourselves from experiencing this additional downside. So I'm going to look and see kind of what happens if we continue to see strength in the overall stock market. We start to see a more convincing bottom form, at least in the near time frame. So even if this is just over the coming weeks and months, even if we're just going to get another kind of rally to lower highs on the macro side of things, that still could present trade opportunities. And if we see that strength in stocks, we're likely to see TLT being pushed down. If we come back to these areas here under $85, you know, maybe looking to rebuild that TLT position, same thing that I've done previously, $80 to 85. Look at building a TLT position. That's a hedge position. Worst case, if we do go into a recession, which a lot of people are expecting now, the TLT positions do tend to perform very well during those times. Again, though, remember what I said, markets are forward looking, so we need to just because a recession is announced, you know, it hasn't been announced officially yet, but when it is, generally a lot of the downside in the market's already been felt. So just keep that in mind, and we'll continue just listening to the charts. The charts tell us what's going to happen. You know, we're not listening to the news and buying based on when they tell us we're in a recession or when they tell us we should buy. You know, if someone on the news or someone in kind of a major position of power is telling you to buy a certain thing at a certain time, they have some sort of ulterior bias or motive. So obviously, big banks, big financial institutions are incentivized to have your liquidity in the market. That's how they make their money. Basically, most retail investors investing in ETFs and index funds, so they earn that management fee over time. They want you invested in the market, but we don't listen to what they're telling us. We listen to what the charts are telling us. So we see gold taking a little bit of a breather here, not surprising. Silver flat-ish on the day, still kind of riding up this trend line here. So silver looks fine, oil kind of flattish, natural gas down a little bit, copper flattish. We see the Swiss franc having its first day, kind of a first week here, a little bit of weakness kind of after the breakout. That being said, it's still just in this crazy uptrend from the beginning of the year. We'll flip over here. We're going to take a look at some stocks. So I want to take a look. I'm not super interested in buying a ton of individual stocks right now. That being said, if we do start to see that market strength that I've talked about, we need to be ready to pivot, and we need to be ready to enter the positions that we want to build over the next months or years. So the ones that I'm specifically looking at, I really want to focus on AI companies, and I want to focus on undervalued AI players that kind of provide the infrastructure, or ones that have major notable partnerships or are kind of large undervaluations. So the first one that I'm going to talk about is Tesla. You know, obviously the biggest EV maker, or not the biggest EV maker. They're the second biggest EV maker in terms of kind of in terms of units produced. They're behind BYD in China. So they do, they have kind of broken out here. I have previously said under $250 is a decent DCA for Tesla, kind of targeting this 215 region down here as a potential entry, as well as the accumulation range kind of here. Sub 200 is what I want to see, but it'd be good to see them kind of push up a little bit here, get above this VRVP point of control. If we take a look at our momentum indicators on the weekly, we're kind of getting to that oversold territory. MACD slowing down. We'll flip to the daily, see how it looks there. So same thing here, a little bit more bullish momentum. We see that DMI curling up, but we also see the MACD, you know, still we might have a little bit more work to do before we can get that kind of breakout move. That being said, so like I said, below 250 DCA territory, 215 more of an accumulation territory, 175 to 200. I'm really interested and I want to buy Tesla in that range. AMD here, one we've been watching for a while. You know, we were hoping for this kind of price action, but it didn't play out, just breaking down. We have gotten back above the trend line for now, but we're still in that downtrending price action. That's why we didn't take any action on this, and we avoided this major drop because we didn't have the structure to enter the market. That's why I say wait for confirmation. I like AMD as kind of a provider for AI. You know, they make chips, that kind of thing. So they're a competitive NVIDIA. They don't have the same market presence as NVIDIA does for AI, but I expect them to continue branching into that sector because of the revenues and the growth available there. So we want to see it get back above this 50-day moving average, you know, holding higher low, higher high support. For now, we're just watching it. It's still in that downtrend. Sorry about that. Intel, I'll flip over to my stock list. I don't know why they keep deleting here. Basically, Intel was one we were also in. I did get stopped out of it, unfortunately. You know, I'd rather get stopped out and cut the trade because we lose that price action. So Intel, I am interested in them, but I'm kind of just waiting and seeing because we did lose the uptrending price action. So still just in no man's land in terms of Intel. I prefer NVIDIA over Intel. But that being said, we'll wait and see if we get that bullish price action back. There might be an opportunity there. BABA up 7% today, so we entered that at 105, kind of 106. We almost came down to our 786 target here. I did previously say $95 was a really good buying opportunity for BABA. I didn't take the buy at 95 because the uncertainty in the markets and the trade wars. I felt safer just adding to my long-term index positions like the SPY, the NASDAQ, or Bitcoin than I did taking a position here. We saw the bounce, we saw some strength. We entered the market at 105 roughly for BABA, and we're sitting in profits nicely. So BABA, we'll see it's coming into this resistance zone right here. But we're going to watch for that higher low and additional entry into BABA. We'll keep going down here. We'll take a look at Tempest AI. That's another one. That's that Nancy Pelosi AI stock that she recently opened a position in. So we're still stuck under the VRVP point of control. You know, our moving averages aren't looking super bullish, but we're holding decent support through here. So we're going to continue following this. This is another one that I am interested in. We're going to take a look here. I'll show you. CoreWeave is another AI player that I'm interested in. This is an AI hyperscaler. They did recently just IPO, so it's a fairly new company. They're backed by NVIDIA, so NVIDIA owns $250 million in shares of CoreWeave at a share price of $40 per share. So sitting at 43 right now. If we go to 40, you know, you want kind of exposure into an AI hyperscaler that's backed by NVIDIA. You could go there and then you're basically buying at the same price that NVIDIA has paid. That being said, we want to make sure that we're getting that higher low structure. So we're just getting a breakout now. We're only on the 4-hour chart because this is such a new asset. We don't even see some of our indicators really kind of registering here. So that's the thing. You need more price action for these indicators for them to really be reliable. You can see here we're just getting it on the 1 hour. That being said, you see we're coming. We had a little poke above here. We'll see if we can hold this trend line, but it's not looking promising based on these indicators for now. I'm just sitting waiting. You know, if we can go sub 40, I might look at potentially starting a position in CoreWeave, buying down and then building that position. Another one we like is one of our miners, so Core Scientific. That's another one that's so NVIDIA essentially backed CoreWeave, and CoreWeave has a deal with Core Scientific. So Core Scientific is one of the major AI data center providers for CoreWeave. They have about an $8 billion deal over the next decade or so. So I do think Cores offers a decent undervalued opportunity for kind of that hybrid AI Bitcoin miner. They already have deals signed to the tune of billions of dollars. They have a pretty solid hash rate at about 18 exahash. You know, lots of energy under management, all the right partnerships. So I do think Core Scientific can go on to do well. It's another one I do want to take a position in. Wolf Here is another kind of AI specific miner. So they were kind of transitioning more and more to AI. That's TeraWulf and Core Scientific kind of going about this path. They have a deal with Core 42, who is a subsidiary of G42, who is a major data center provider for the Stargate project, for OpenAI and those major players. So TeraWulf is another decent one that I'm potentially looking at accumulating, building a position if we start to see the market strength return and things start to build a bottom and we see the trends looking like they want to reverse. So really focusing on AI specific plays, especially domestic AI specific plays or geographically specific AI plays. So I like Baba because it's a Chinese AI play. It's one of the biggest ones in my opinion. So there's exposure for that global AI. And then we see Palantir here up 6% on the day. They did just announce that they have a deal with NATO. So a major partnership there, you know, licensing their AI software for NATO military systems. So looking at just all these different opportunities, you know, I think Intel's been lagging for a long time. I think Dell and AMD have been lagging quite heavily behind NVIDIA. That being said, I like NVIDIA as well. You know, nothing wrong with DCAing into that position. We're just kind of riding down this trend line, but still stuck under here, waiting. If we can get back, put in a higher low above this trend line, that's going to look a little bit more bullish. But, you know, we're still just kind of making our plans, figuring out what we want to buy. So looking at the different stocks that are available to us, which ones we want to focus on. So for me, I'm going to really focus on AI specific plays, and then ones I can think that will benefit from that domestic policy and regulation. So we're going to see China really pushing for their own like specific companies in AI, and we're going to see the US pushing for their companies in AI. We've seen NVIDIA recently just announce they're going to start developing, manufacturing an AI supercomputer in the US. So we're just focusing on those companies, the domestic US ones. So we see NVIDIA, we've got Tesla, you know, I like Tempest AI, I like Palantir, I like Baba, I like Intel, I like CoreWeave, I like Core Scientific, I like TeraWulf, but there's all kinds of different companies. We're going to keep looking for those undervalued opportunities, but the ultimate thing that's going to tell us whether or not we're going to take the risk in the market is going to be the SPY. So if the SPY and the NASDAQ look weak and things on the macro perspective look weak, I'm not interested in taking the additional risk in individual stocks, because during those crashes they're going to get hit a lot harder. I don't mind holding the SPY down a little bit on certain buys when my overall position is up on the long-term trend. So that's kind of my approach to the market right now. Still cautiously optimistic, you know, waiting for more clarity on the geopolitical or the macro front, you know, still in no man's land on a lot of these charts. Wait for the confirmation, wait for that structure, and wait for the clarity before you take the risk. So thank you so much for watching, guys. If you learned something new, please share, like, subscribe. It all means the world to me, and I'll see you in the next one.